What's going on, everyone? Welcome back to another video. In this video, we're going to be covering the topic of trends and support and resistance. So I'm going to teach you how to read trends in the market, how a trend is validated. We're going to create some rules around that. And then we're going to shift into support and resistance. So what exactly is support and resistance? How do I identify it in the market? And then we're going to create some rules around that as well and look at some live examples. I'm not going to worry about doing an intro. We're just going to dive straight into it. So let's get into it right now. So I have prepared some slides we're going to go through. I've tried to make it as simple as possible for everyone to understand, whether you're a complete beginner and have no idea how to read trends in the market, or you're just a struggling trader coming back to the basics and want to build a better foundation. So as you can see here, looking on the screen, we're going to start with reading trends and what exactly is a trend and how to define a trend in the market. Now, what you see in front of you is a perfect world scenario. Obviously, when we look at a live chart later in this video, it's going to be an art and a science, and there's going to be a little bit of subjectivity around it, but with experience. And at the end, I'm going to give you guys some homework, if you will, where we're going to spend some chart time every day, 15 minutes, 30 minutes, an hour, whatever time you can dedicate to chart time, going through and reading trends to kind of train your eyes how to see them. So the foundation of reading trends is very simple. We simply look for price to move consistently higher or lower. Now, what that means is in a bullish trend, you will see price make higher highs. And in a bearish trend, which means bearish is a downtrend, so price is moving down, and bullish is an uptrend where price is moving up. So a bullish trend, you'll simply see price make higher highs, and a bearish trend, you'll simply see price make lower lows. Now, don't worry if none of this makes sense. I have a few examples we're going to go through. So hopefully by the end of this video, you will have a clear understanding of how to define trends and read support and resistance. So moving on to the next slide, this will give you a better understanding of how we are defining the trend. So let's start with a bullish trend, also known as an uptrend. So you can see price is moving upwards, price makes a new high, and then it retraces with the pullback. And then we have this extension higher, which is a higher high taking out the other high over here. So this initial high over here is now higher than this high. We have that pullback, and then price makes a higher high up here. So this is essentially the very basic foundation of reading a trend. When price is in an uptrend, which means it's moving up, it has to make consistent higher highs for the trend to be valid. We're going to touch on this later. So if you're still a bit confused, we have a lot more examples we're going to get into. So moving on to a bearish trend, this is pretty much the inverse of what we just looked at, the bullish trend. So a bearish trend, also known as a downtrend, where price is consistently moving down. We pick our starting point, and then price makes this extension lower, making a new low. We then have our pullback when price moves back up, and then we have a lower low. So this lower low is lower than this initial low over here. We have our next pullback, and then another extension lower, creating a new lower low, which takes out this low over here, and then a pullback. So moving on to this example over here. So let's dive deeper into understanding the terminology and what all the components mean. So when price is in a downtrend, the move down is called an extension, and the small move back up is called a pullback. When price moves down in a bearish trend or a downtrend, it is called an extension, so this over here. And when price moves back up, this is called a pullback. So you can see here, the move lower is an extension, the move back up is a pullback. So new low, and then we have a lower high. Extension down, so the move lower is the extension, and now we have a lower low, and then we get that pullback. Then we get another extension down, creating a new lower low, and then we get a lower high. So lower highs are essentially the pullback, where price is trying to go back higher, but it is lower than the initial highs over here. So what is the meaning of extensions and pullbacks? So the extension is the result of a strong selling pressure due to the currency weakness, so negative news, in a bearish trend. So the extension will be related to news or fundamentals, bank rates, economy data, technical analysis, or a combination of all the above. A pullback is the result of the market taking a breath due to sellers taking profit, loss of momentum. Market has reached a significant level of support, which we'll get to in a minute. Also a great selling opportunity to ride the next extension down. So extension lower, pullback, extension, pullback, extension, pullback. On the pullbacks, they make great selling opportunities for you to get involved and ride the next extension down. So now let's look at a bullish example of what we were just looking at. So when price is in an uptrend, the move up is called an extension, and then the move back is called a pullback. So it's literally just inverse in what we are looking at. When price moves up, the extension, it creates a new high. When price moves back down, which is the pullback, it creates a higher low. So as you can see, the extension up is a new high. Then we have the pullback, which is a higher low, which is higher than this starting point over here. We have that new extension up higher, which creates a higher high. So it takes out this high over here. And then we have that pullback, which is a higher low, which is the higher point over here. And then we have another extension up. Once again, just inverse, but I'm going to go over it just to give you guys an example of a bullish trend. So the extension is the result of strong buying pressure due to currency strength. So when in an uptrend and you see price moving upwards, it's due to either positive news, which is fundamentals, bank rates, economical data, technical analysis, or a combination of all the above. And the pullback is the result of the market taking a breath due to buyers taking profit, loss of momentum. Market has reached a significant level of resistance, also a great buying opportunity to ride the next extension up. So when I talk about buyers taking profit, as traders, we like to ride the extensions, we like to ride the trend. This pullback, which we'll just touch on in a minute, is a counter trend move, but also makes a good buying opportunity if you can get in on the pullback to ride the next extension up. So when price moves up, what causes the price to come back down is buyers are now taking profit. So they are now selling their orders back to the market, which causes price to drop back down, creating that pullback. So what makes a trend valid? Defining rules for a bearish trend. A bearish trend to be valid, we must have a lower low. So what we were talking about before, the first new low, the second is a pullback, and the third is a lower low, which now the trend is valid. As long as price keeps putting in lower lows, a bearish downtrend remains valid, telling us to keep our short bias. As soon as price breaks above the most recent pullback, the bearish trend is now invalid and our short bias may change. So what that means is, let's just go over this diagram real quickly. This is a bearish trend, so price is moving down. We have our extension, which is our new low. We then have our pullback, and then we have our lower low. The trend is now valid, and now we have a short bias. Our lower low is essentially taking out this low over here, and then we have that pullback. So if this pullback breaks this pullback over here, so it's higher, so pullback violated previous pullback. So number two, making the trend now invalid. So if price comes back up, trust me, we're gonna look at some real world scenarios to kind of really put this in motion and make it make more sense. I know this can seem a little confusing to a lot of new traders. It was confusing to me in the beginning, but the more chart time you do and the more you train your eyes to see it, it's very kind of simple. Once again, this is for a bullish trend, so more or less the inverse of what we're just looking at, but let's go through it anyway. So defining rules for a bullish trend, so an uptrend where price is moving up. For a bullish trend to be valid, we must have higher highs. So first is the new high, second is the pullback, and the third is the higher high. Now that means the trend is now valid. As long as price keeps moving, putting in higher highs, a bullish uptrend remains valid, telling us to keep our long bias. As soon as price breaks below the most recent pullback retracement, the bullish trend is now invalid and our long bias may change. So once again, we have our extension. So if our starting point was here, this would be our first initial extension, which creates our new high. We then have a pullback, and then we have another extension, which creates our higher high, and the trend is now valid. As soon as this move here, the pullback, so this green over here, you see how it never came back below the blue starting point here, but this red bar over here came below this arrow over here, the green one. As soon as it breaks below that, it is now invalid, and it gives us a idea that the bullish trend may be over and a reversal may be coming. So this is just an overview and conclusion on reading trends. So the extensions are the move where most traders want to be involved. So like I was saying before in the previous slide, we want to get involved on the pullback if we are riding the extension. So in a bullish example, when we get that pullback down, if we can get involved in that pullback to ride the next extension up, that is what riding the trend is. So this is a trending move that traders can ride for multiple hours, days, weeks, depending on your trade style. The trend is your friend until it bends. The pullbacks are counter trend, short-term moves in the opposite direction. Traders can also make money trading the pullback, but the higher probability move is getting involved during or after the pullback to ride that next extension. Pullbacks are temporary pauses in the market, and they provide great opportunity to get involved in the overall trend, like I was just saying. So what happens if no new highs or lows are created? If the market is not creating higher highs or lower lows, it's called consolidation or ranging. A ranging market simply means price is bouncing between support and resistance levels. Price can't break above or below support and resistance levels, so it trades within the range and just bounces between it. Now that we have an understanding of how trends work and how we define trends in the market with higher highs or higher lows in a bearish trend, let's move into support and resistance and really kind of bring all this together to give you a better understanding of what's happening inside the market. Support and resistance are simply respected levels that have a lot of significance in the market that can cause price to react with a pause or a rejection. Support occurs when price is moving down, approaching another significant level of previous support or resistance, and resistance occurs when price is moving up, approaching another significant level of previous support and resistance. So we're going to kind of dig deep in this in a minute, but as you can see, support lies on the bottom and resistance is the top. So think of resistance as a ceiling and support as a floor. As you can see, price moves up in this example over here, hits the top of this ceiling and then gets rejected coming down, back to the floor, gets rejected off the floor and then comes back to the ceiling, and then so on. So now let's dive deeper into what defines support and resistance and how it really works. In this example below, you can see a bullish trending market, so an uptrend. Taking what we have learned on reading trends, extensions, and pullbacks, we can now dive deeper, adding support and resistance. When price is trending up and has a pullback, this creates resistance in the market. So in this example, I know it looks a bit overwhelming, but bear with me. We have this extension up like we're talking about with the trends, pullback, extension up, pullback, extension up, pullback. When we have our extension, our new high, and price pulls back, that high point is now resistance. Because price couldn't move any higher and got rejected at that price level and came back down, we get that pullback. The next extension up, if resistance is broken, it now becomes support. So as you can see in this level over here, when price comes back down, we now have a support level. This is called support turns resistance or resistance turns support. You can see in this example, we have our extension, pullback, resistance becomes support. We break through it again, higher high, resistance broken, resistance becomes support. I've got a few examples. We're gonna also do a kind of live market scenario where I'm gonna take you through and we can read the trends to really kind of paint the bigger picture of what's happening. So when price is trending up and has a pullback, it creates resistance like I just explained. Think of this as a ceiling. Buyers are trying to punch through, but buyers don't have enough strength to break through, so they retrace, creating that pullback. When price returns to this level where it could not break through, so resistance, so we have this extension up, the buyers could not break above this level, so they retrace. When they try and return, if they return with a lot of strength, it will do one of three things. So it will stall, lose momentum, and then it will just range like we're talking about before. It will reverse if it is a very strong level of resistance, or it will break through, continuing the uptrend like we have in this example. So every time price came back after that pullback to that initial level of resistance, it broke through, and then it used that resistance turned support as a new level of support. This is just a bearish example, so I'm going to run through it as well. So in this example below, you can see a bearish trending market, which means the market is trending downwards. Taking what we have learned on reading trends, extensions, and pullbacks, we can see that when price is trending down and has a pullback, this now creates support, not resistance. So once again, think as support as a floor. You are trying to punch through, but sellers don't have enough strength to break through, so they retreat, which is here. So you have that extension down, you have support created, and then the sellers retreat, and then they come back and then they break through it. So when price returns to this level where it could not break through support, price more times than not will react doing one of three things, exactly like the other example. It will stall, loss of momentum or range, reverse if it is a strong level of support, or it will break through, continuing the downtrend like we have in this example. So just touching on with what happens when support or resistance levels are broken. Once support or resistance is broken, it tends to act as a new level of support or resistance when price pulls back to it. If support is broken, it turns into resistance. If resistance is broken, it turns into support. This is what creates the ebbs and flows in the markets, the extensions, the pullbacks, the extensions, the pullbacks. So this example is a little bit more easy to understand. As you can see, we have a bullish trend on the left and a bearish trend on the right. We have our extension up, we have our resistance level created, and that pullback because buyers weren't strong enough to push through that resistance level. As price returns back up to that level, you see buyers are now stronger, they break through it, resistance is now broken, and we have that new pullback over here. Resistance turns support. So now price is using that as a floor, not a ceiling. And this pattern usually repeats over and over again until it is broken. So now let's jump into a real life kind of scenario. Obviously, that was a perfect world scenario where I just kind of draw the trends, and in real life data, looking at a live chart, you got to kind of use a bit of subjectivity, and it's going to come with experience to train your eyes to see the ebbs and flows, support and resistance in the market. Now, I'm on Euro USD 4 hour, and this is the most current data, so I'm not going back to find the best scenario I can find. I'm going to use live data right in front of me. So as you can see, today is the 15th of April 2021, and you can see right there the date. And we're just going to go back, a few days until last week, and we're going to go and just analyze what's been happening in the market. I'm going to show you how support and resistance is created and reading the trends. Now, I'm sure most of you can pick it up already, but as you can see, let's start with this example right here, and we're going to find our starting point, which is our highest high. So just zooming out on most recent data, you can see up here, this is our starting point because it is the highest point on the chart that we can visually see in front of us. So using this as a start point, you can see we have our extension down, which is our new low, takes out this low over here. We have our pullback, and then we have our new low. This is now a valid trend. Remember, we had that extension, pullback, and now we have our newer low. So this is clearly a bearish trend. Now, let's talk about support and resistance. As we know, just draw this over here. Using support and resistance, you can see, as I was demonstrating before, as we have this extension down, price finds a level of support, and then it bounces back off it, and then sellers reapproach that level. So sellers reapproach this level over here, and then they have enough strength to break the floor, break the support level, and then come back down. Now what price is doing is it's now using this support level over here, this white box, as resistance. So remember, resistance is the ceiling, support is the floor. So as price came back down, sellers broke through, created a new low, and then as it retraced back up, which is the pullback, it used that support level now as resistance. So if we just draw this in there, we now have resistance, and you can see price is more or less trying to break through. The buyers can't break the ceiling anymore. There isn't enough strength. They've tried twice, and then price now continues lower. This is essentially the ebbs and flows in the market, and this is the most simplest way I can kind of explain it. There is going to be a lot of somewhat subjectivity without creating too much rules. How do you define it 100%? Me personally, I struggled with this a lot in the beginning days when I started my trading journey. What helped me was using dynamic support and resistance, which is simply using exponential moving averages, so moving averages. So if I just remove all of this, you can now see pretty much what we're talking about. We have our starting point, we have our move down, which is the extension, and then the pullback. Using the 50 EMA, so this blue line over here, let me just make that a bit bigger for you. Using that 50 EMA, that is dynamic support and resistance. So that is now a resistance level. Moving down from that, we have our move down, and you can see it comes back up and then gets rejected off there. Of course, it is easier to define rules around moving averages, because if price breaks above it, you can expect price maybe to move up, be more bullish, or if price rejects it like it did in this example over here, you can see price pinned that blue line and then price came back down. These are different ways you can approach the markets to define rules on how you read and view trends in the market. But the most common way and the most easiest ways, let me just turn these off, is simply looking at the ebbs and flows. Looking at the extensions, the pullbacks, extensions, pullbacks, extensions, and pullbacks. Looking at live current data as of today, right this minute, you can see the high point over here. Let me just make that different color. You can see price is approaching this level. So like we were saying earlier, price will do one of three things where it will approach this level and stall and lose momentum. It will either reverse. So we may see this happen where price will continue up and we'll see it come straight back down, or we'll see maybe a little retracement and price may break above that level. So above this resistance level now, and we could see it continue higher. Reading charts like this and doing your technical analysis will give you an idea of what may happen. I'm not big on predicting, I'm big on reacting to what the market is telling me. So if price simply breaks above this level, I would look for price to be more bullish. So let me just draw this up real quickly again. So if price breaks above this box, once again, support turns resistance or resistance turns support. If price comes higher like this and breaks above, what would you expect to happen? I would expect price to come and retest this area that was resistance, but now turns support. And then I'll be looking to get involved and ride the next extension up. That is how you kind of predict what may happen and how I do my technical analysis, reading trends in the market. So let's quickly run through that one more time. And I'm going to show you guys what we're talking about with the rules, previous rules we went over in the slides previously. So starting from our high point. Now, one thing I want to touch on is, do you use this high point? Do you use this high point? I wouldn't suggest going too far back to read your trends. I would just focus on the most recent data and find your most recent high point. Yes, you can technically start over here, you can start here, but let's just start with this one just to give you an example of a valid trend. Because if you start over here, you can see you may come down, come back up, and then you have your valid trend. So do you draw your trends like this, or do you draw them like this? So let's go over this real quickly and I'll explain. Now, if we use this as our starting point, so let's get more visual and I'll type it in here. So this would be our starting point. Let me just make that a bit bigger. All right. If that's our starting point, this is our first extension and this would be our pullback. So my text. This would be our pullback. And then I would have our other extension. This would create our lower low equaling our valid trend. So now we've had that 3 moves. We've had 1, 2, 3. This is now valid. So going back to the rules I had in the previous slides, how I had it labeled 1, 2, 3. This is now valid. So moving forward, if we were to start our trend over here, and this is our high point, you can see we have more or less the same thing where we have our starting point. So let me just add the new low there. We would have our new low, pullback, and then our lower low. This is what I had trouble with reading trends in the beginning, and there was a lot of subjectivity to it. Do you start here or do you start on this one over here? I personally can't give you rules around what to do, but whatever you find consistency in and whatever you start to do, continue that throughout all your trading. So as you can see, we have 1, 2, 3. With the rules of defining trend and invalidating the trend. This trend from starting up here is not valid until, sorry, let me just delete these. So the only reason this trend can be violated is if this extension came up like this and took out this high over here. Then that would make this downtrend, this bearish trend, invalidated, and I'd start looking for price to move up. So because that didn't happen and we found resistance at this support level, like I was showing you guys before, because we found resistance at this level, price has ebbed and flowed in this area, created a double top, and then it fell from there. This over here took out this low over there. So even if you started it from this point over here, let me zoom in and I'll quickly show you what I mean by that. So let's say we started from, actually let me get rid of all this real quickly. Let's say we started from this point over there. If price, this was our starting point, price came down and we did something like this, this wouldn't be valid to me because we never took out this low over here. So we must always take out the previous lower low. So don't be afraid to zoom out and see what's happening. This is inside this leg over here. So all this, whatever happens inside this point here, whatever happens in here is not necessarily invalid and shouldn't be considered, but this is more or less just kind of ranging. This would be all part of the pullback on the daily time frame. So if you went up into the daily, you would see that's more or less almost a pullback, and then you got your double top and then price falls away. But coming back down to the 4-hour chart, you can see more or less this would be what we're looking at. This move here, this pullback. So if we just got rid of this, anything that happened, so let's say price did something like this, and then move down over here. All this in here wouldn't be counted, would be just ebbs and flows. You wouldn't count that as part of the trend. I hope I'm making sense with you guys. So it would be like that. In order for the trend to continue, price must break the most recent low. So let me type this in again. So that's our starting point. Then we have our new low. We have our pullback. And then we have our lower low. So this low is lower than this low over here. Technically, if we just get the replay button and we do this, as soon as price breaks, you see how price didn't break below? As soon as we get a body close, just like that, above this pin, that lowest point, now the trend is in full effect and we can expect price to come lower, which obviously it did because we've seen the price. And then it retraces, so price found support down at the bottom here. You can see price found support here, but then broke below it, and now it's using it as resistance. See how it pinned it, came back down, and then we pinned it again, creating that double top formation, and then price came back down. And now we broke below this low over here. So like I was saying before, all of this in here is just ebbs and flows. Now that is our lower low. Because we broke this lower low over here, this is now a lower low. That's our pullback. Let's see what happens now. So if we bring this over, just make this a bit bigger. So you can see on the 4-hour time frame, if we circle this and we go down to maybe, let's say, the 15-minute chart, you can see how price kind of stalled. It lost momentum, smaller candles as it approached. It broke through, and then it used it. Let me just delete this wonky circle. It used this area as it broke through as resistance. So you can see price testing this area. So jumping back to the 4-hour time frame, I would class that as our lower low. Looking at all the data without the replay mode, that would be our pullback. This would be our new low. Let me just label these for you guys. Whoops. Pullback, our new low, and then price comes up. You can see it's using this area as resistance a little bit. Now that price came back up and it took out this pullback, the trend is now violated, and we could expect our short bias, so this trend, to be finished. So because price broke with a body above this line and then we retested it, so you see resistance broken, now it's support. You can see it's actually respected it on the dot, so exactly at 1.1800 where that pin is on the pullback. Price broke it and we bodied it twice without breaking back below it, and then price continued up. And then you can see ever since we violated that downtrend, price has since started moving higher. This is essentially how we read trends. So now this lower low becomes your new starting point for this bullish trend. We have our new high. We have our pullback. And then we have our ebbs and flows. So you can see just like that. There is a lot of subjectivity in this method. That's why I prefer using exponential moving averages, dynamic support and resistance, because you gotta somehow, I found and I struggled a lot with classing these as pullbacks. Are they pullbacks? Technically they are, but when you're trying to trade live, if you don't have a clear set of rules or how to define these, or you haven't trained your eyes enough and put in enough chart time, this will become very confusing. You'll second guess yourself if your trading plan revolves around trends, and it can become very kind of frustrating. Once again, touching the topic of pullbacks and extensions real quickly. Let's start with our starting point. So sellers are selling up here. So for some reason, whether it was news, technical analysis based, whatever, there was a lot of selling momentum. When price hit this level over here, let's just say it was a previous support level or news or whatever, all these sellers that were selling are now taking profit. So when you take profit, you're selling back to the market, causing price to go back up. And then this is a good selling opportunity. So like I was saying before, pullbacks are good selling opportunities. More sellers will be getting involved at this level to ride the next extension down. When they get down to this level, they take profits, giving back to the market. So they start giving selling back to the market while they take profit. And then once again, they decide to sell again. And that's essentially why pullbacks are good areas of price levels to get involved in the next extension down. Back on the topic of moving averages, so this blue line is the 50 EMA, so the 50 exponential moving average. This is a good opportunity to buy in many markets. When price approaches the 50 EMA, it's a good place to take a sell order or buy order if it's the other way around. So you can see every time price more or less comes back to this 50 EMA, price comes back down. And then once price breaks back above it, it kind of retests the area and then it takes off. I hope you guys got some value out of this video. If it was confusing to kind of explain, let me know in the comments below. I will be more than happy to do another video explaining it on different angles, maybe explaining moving averages, using that dynamic support and resistance side of things. But as trends and support and resistance goes, this is the very basics, very straightforward approach of how to read them in the market. Yes, looking at a live chart opposed to kind of perfect real world scenarios, it is going to require a lot of experience and practice looking at charts. So what I recommend for those of you who are still with me watching this video, I would want you to go through the charts and simply drawing trends in the market, marking out the ebbs and flows, the extensions, pullbacks, both bearish and bullish. And you can even do it on any time frame you want, because all time frames move more or less the same way. I would probably recommend doing it on the daily, since there is not much noise and movement, and you'll be able to pick them out better. Once you feel confident, whether you do it 5, 10, 15 minutes, an hour every day, just simply drawing out the ebbs and flows, maybe move down a time frame and see how the more noise and how you feel kind of reading trends with a bit more action and price action going on. I'll give you an example right now where simply looking at the 15-minute, you can see there is a lot more going on. There is a lot more ebbs and flows, but coming up to the daily, you can see the trends a lot more clearer and a lot more easier. Once again, I appreciate those of you who stayed around to the end of the video. I hope you guys got some value out of it. Please smash the thumbs up button if you did get any value. Don't forget to subscribe to my YouTube channel and also hit that bell icon so you get notified for any content I release. Thanks for watching the video, and I'll see you in the next one.